Welcome back, everyone. Today, I'm thrilled to dive into four exciting stocks with technical setups so tempting that you just can't afford to miss them. Two of these stocks are on the verge of a breakout, just waiting to make their move. The other two stocks are in the process of retesting their recent breakout levels. Before we dive in, remember these stocks are best suited for short-term swing trades, mainly driven by technical charts with just a touch of fundamentals for added context. This isn't investment advice, just educational content. Let's jump right in. So let's get started with the first stock on today's list. Oh boy, this one has been through a lot lately. On the daily time frame, this stock has been riding a textbook downtrend for the past 10 and a half months. It hit a high of $42 back in February 2024, but since then it's been on a downward slope, repeatedly rejected at the trend line. Not once, not twice, but four times. And here's where it gets really interesting. The current price is hovering just a fraction of a percent below this trend line, signaling it could be on the verge of a breakout. If this happens, the first resistance sits at $18.50, and beyond that, the next big hurdle is at $25. That's a potential rally of about 38%. Let's not forget, this stock has built its recent upward momentum from a $13 mark, which also happens to be its historical support and all-time low. Another notable point is that the price is currently trading above its 50-day EMA, but still below the 200-day EMA, creating an intriguing tug-of-war between short and long-term momentum. So will it break through this time? If it does, we're looking at a potential game changer. If not, well, no hard feelings. We've got plenty of other stocks to analyze. Now, the name of the company, Progyny Inc., ticker symbol PGNY. Progyny operates in the healthcare sector, specifically providing fertility solutions to employers. They manage services like in vitro fertilization, IVF, egg freezing, and other fertility treatments with a vast network of specialists. Progyny has a market cap of $1.5 billion, making it a small cap company. It generated an income of $57 million on revenue of over $1 billion, giving it a profit margin of 5%. The PE ratio is 31, and its EPS is 58 cents. All right, that was stock number one. Time to move on to the second stock. Now, this one's on the weekly time frame, and wow, what a chart. Back in November 2024, after a 3-year consolidation period, this stock broke through its resistance level of $127. That's a significant breakout, folks. The stock's previous high from November 2021 is now in the rearview mirror. Currently, the price is in a critical retesting phase, sitting just 2% above the breakout level. If it finds strong support here, we could witness an upward rally that takes it to new heights. However, if it falls back below this level, the downside risk is relatively limited to about 2%, which is a fairly manageable risk for many investors. Adding to its strength, the stock is trading comfortably above both the 50-day and 200-day EMAs, which is generally a bullish signal. With the breakout already in play, the next move hinges on whether this retest holds firm. Keep this one on your radar. It could be a big mover. And the company behind this stock? Live Nation Entertainment, Inc., ticker symbol LYV. Live Nation is a global leader in the entertainment industry, managing live concerts, ticketing services, and advertising. It operates across segments like concerts, sponsorships, and ticketing, with a strong presence both online and offline. Fundamentals. Live Nation has a market cap of nearly $30 billion, putting it firmly in the large cap category. The company reported an income of $230 million on sales of over $23 billion, albeit with a slim profit margin of 1%. Its PE ratio is 139, and its EPS is 93 cents. All right, everyone, let's dive into the next two stocks, and trust me, you'll want to stick around for these. Third stock. Let's take a closer look at this stock on the weekly time frame. Back on November 1st, 2024, it broke through a major resistance level of $123, a resistance it hadn't conquered in 3 long years. That's the kind of breakout we love to see, right? Currently, the stock is in a retest phase, trading about 1% above that breakout level. This level is crucial because if the stock can hold firm, it sets the stage for an upward rally to uncharted territories. However, if the retest fails and the price dips below the breakout level, the downside risk is limited to just about 1%, a small price to pay for the potential upside. What's particularly reassuring here is that the stock is trading above both the 50-day and 200-day EMAs, signaling a solid underlying trend. This setup is a textbook example of a breakout retest pattern, and I'd say watch this one closely. A bounce off the retest could mean big things ahead. Before I reveal the name of the company, may I humbly request you all to engage with the video by liking, commenting, and subscribing to the channel. Every week, I share at least 3 videos showcasing stocks at key levels. Your engagement not only boosts the channel's reach, but also inspires me to keep going. All right, the name of the company is Dorman Products, ticker symbol DORM. Dorman Products is a major player in the automotive aftermarket industry, supplying replacement and upgrade parts across categories like steering, suspension, undercar, and hardware components. Dorman is a mid-cap company with a market capitalization of $3.7 billion. It has reported an income of $186 million on sales of nearly $2 billion, boasting an impressive profit margin of 9%. Its PE ratio is 21, with an EPS of nearly $6. Now for the final stock on today's list. On the weekly time frame, this one is trying to shake off a downtrend that's lasted over 2 years. Its last significant high of $42.50 was hit way back in August 2022. And since then, the price has faced consistent rejections at a downward sloping trend line. Currently, the stock is trading about 3.5% below this trend line, suggesting a potential breakout could be right around the corner. But here's the catch. The stock is battling resistance at its 50-day EMA, which has been a source of selling pressure. On the downside, it's also below the 200-day EMA, so caution is warranted. Should the breakout happen, though, we could see the price climbing toward its next major resistance at $34, which represents a 31% upside from its 200-day EMA. Of course, volume will be key. All right, the name of the company is Equinor, ticker symbol EQNR. Equinor is a global energy leader, specializing in the exploration, production, and marketing of oil, natural gas, and renewables. It operates across multiple regions, including Norway, the USA, and beyond. Equinor is a mega-cap company with a market cap of $69 billion. It generated a massive income of $9 billion on revenue exceeding $100 billion with a solid profit margin of 9%. The PE ratio stands at 8 with an EPS of over $3, and it offers a dividend yield of 5.3%. And there you have it, folks. 4 stocks with technical setups you just cannot ignore. Remember, these insights are for educational purposes only. Always do your own due diligence or consult a financial advisor before making any investment decisions. If you found today's analysis helpful, don't forget to smash that like button, leave a comment, and subscribe for more weekly stock insights. Your support means the world to me and helps this channel grow. Until next time, take care, stay informed, and happy investing.